Hello everybody, I'm the Boss Hog, and today I thought I'd do a stock review video, specifically of two mining companies, Evraz and Rio. It's a video I've been meaning to do for a little while actually. Evraz are a bit of a conviction play of mine, and last week was pretty brutal for the UK listed miners, and both of them fell quite a lot, so I was looking at both of them as potentially a buying opportunity. I have been buying a lot of Evraz recently, and for full disclosure, I have 772 shares of Evraz. It's a top 10 holding for me. I don't currently have any shares of Rio Tinto, but I have owned them in the past, and I wondered whether at current prices it might be worth me owning them again. So, all that out the way, the main purpose of this video is to do a few things. First of all, I want to introduce everyone to Evraz. It's quite plausible you haven't heard of them, even though they are a FTSE 100 mainstay. Explain why I don't view Rio Tinto as a generalist miner. So Evraz is definitely an iron ore special play. Rio is normally seen as kind of an all-weather kind of generalist miner. I just don't think that's true at all, and I'm going to explain why that's not the case. Then I'm going to compare the two. Once I've hopefully persuaded you that these two companies are comparable and what it is that they do, we can then start looking at their performance over the last 5 years, comparison of their dividends and their dividend policy over the last 5 years. Some things to consider. So again, assuming you're on board regarding the fact that both of these companies are in fact iron ore plays, we're going to have a look at the risks around iron ore price, financial risks and political risks. Why, in my opinion, Evraz is still a better buying opportunity, but not without some caveats around Evraz. So all that out of the way, let's have a look and compare these two iron ore companies. Let's do it. All right, so first of all, an overview of Evraz. Evraz is currently the 65th largest company in the FTSE 100 with a market cap of 8.5 billion. So not too big, but not too small either. It's actually the fourth best performing company in the FTSE 100 over the last 5 years, according to Hargreaves Lansdown. So pretty impressive. And if we have a look at it, this is taken from the investor relations website, and this is specifically H1 for the 2021 financial year. And really here what I want to do is just highlight the fact that this is primarily an iron ore business. You can see here what they call steel. This is basically their Russian and European steel related operation, so it includes a couple of European sites as well, but primarily Russia based. They do also have a bunch of steel mills in North America, in Canada and North America, mostly in Canada, as well as a few other bits as well. And the other thing I wanted to draw your attention to is the bottom right graph, and you can see here as well that steel is dominating their revenue and income. A little bit on coal, which they're currently considering disposal of, but coal is definitely contributing to earnings as well as revenue. And then you can see here the rest of it's just nothing. But broadly speaking, steel is the vast majority of their business, and like I say, they lump iron ore and steel into that grouping there, and they're really kind of an end-to-end play. So they do a lot of, like I say, steel manufacturing and so on, refining. So it's like I say, it's Eastern European primarily focused, and all of its higher margin stuff, and certainly all the stuff that's bringing in all the earnings, is that. You can see there, other steel North America, but they're tiny revenues in the scheme of things. So broadly speaking, I think it's easily to accept that Evraz is an iron ore special play. What might not be so obvious though is Rio, and we're going to have a look at them next. Okay, now a little bit about Rio and why it's not a generalist miner. So first of all, it's the sixth largest company in the FTSE 100, market cap of just under 70 billion, and it's still the 18th best performing company in the FTSE 100 over the last 5 years, so not exactly a bad investment if you've made it. This though, I have to say, it's a lot harder to get information out of Rio than it is from Evraz. Evraz, has like a 30-page lovely presentation slide deck. Evraz, you either have to read through an 80-page black and white half one summary or a 400-page end of financial year marathon. I really wish somebody in their investor relations team would tidy some of this up. Anyway, I've skimmed some of those documents so you don't have to, and written this table for you. And I guess first of all, this is their groupings, but I find them a little bit deceptive. So first of all, you can see iron ore in terms of revenue is 58% of total revenue. In terms of earnings, it's 76%. Also here, I think because they've grouped copper and diamonds, I had to delve pretty deep to actually get a figure of 3%. is their earnings from copper. Most, 2/3 to 3/4 of that third line down, copper and diamonds, is really about the diamonds. And also, if you look into copper, although they're spending 2/3 of their exploration budget on copper, they're not really doing a great job at it at the moment, to be frank. So production of copper actually fell 10% year on year, which I view as quite disappointing. I would say that aluminium, although it was virtually flat, it was up slightly. They've got some nifty refining capabilities, especially in Canada, where it's basically self-sustaining. It's a pretty great setup, and I think actually maybe aluminium was one of the surprises when I started to look into Rio, but it's not a huge part of their offering. You can see here, although it's nearly 20% of revenue, it's only less than 10% of earnings, so it's not really the money maker of Rio. Iron, however, was up 4% year on year. That's volume specifically. Obviously, there's only so much Rio Tinto could do around the pricing of the iron ore, but the output itself was up 4%. So again, if anything, they're actually becoming more of a specialist in iron ore, despite what they might be saying regarding where they're spending their exploration budget. And energy and minerals here was also a year-on-year slowdown between 1% and 5%, depending on what you're looking at. So, again, when you actually look at the earnings, especially, it's pretty damning. Evraz is in the high 60s. These guys, depending on whether you look at revenue or earnings, you're looking at between 60 and 75%. I think it gets to the point where you can start to see them as comparable. Yes, sure, Rio has a few more things, the aluminium, copper and diamonds, and the energy materials, which in fairness is similar to what Evraz has regarding, its coal and its steel mills and those kind of stuff as well. But yeah, Rio has aluminium, copper and diamonds, but it's just not making a huge contribution to the overall earnings. So that, I guess, is how I would approach this. I would say that they're both 70% iron ore, and now we can start comparing them. So let's do that. All right, so let's have a look at the details of the share performance. So these graphs are actually taken from the London Stock Exchange website, freely available. It's quite nice as well because it gives you a compare feature, which is what I've done for Rio and Evraz. Top left graph here is across 12 months, and then top right is across the last 5 years. You can see in both instances, Evraz finishes comfortably ahead. It's not especially close. And then if I have a look at the Simply Wall Street website for both of these companies, I've just scrolled down and done the before and after dividend calculation that's there. You can see in whether we take the 5 year or the 1 year here, Evraz just massively outperforms Rio. It's not even especially close. Now, in fairness, his share price only, by extension, takes into account dividends. We'll have a look at them in just a second, but this is going to be measuring overall capital performance as well as sort of the impact of any buybacks, etc. And we'll see in a second as well that dividends also Evraz performs better. But here I think it's quite conclusive, really. You can see from the graphs and the data, Evraz just wins over the last 5 years, which, like I say, has been a good period for iron ore plays. And it's why Evraz and Rio both performed so well. But Evraz comfortably beats Rio financially in terms of its share price performance over that time. All right, so I know for any Americans watching, you get quite excited if the dividends above 2%. UK investors laugh because it's fairly common to find yields above 5%, sometimes even above 10%. Nothing super unusual in that. We have a bunch of companies that throw off cash, and mining shares are among them. London definitely has a heavy listing of mining stocks, and you can see here that both of these companies yield crazy well. Evraz is one of the best yielders in the FTSE at all. And it's been consistently doing that. So first of all, with a lot of the mining companies, they report in dollars, not uncommon at all for commodity plays, even if they're listed in the UK. So I got a lot of this data from Hargreaves Lansdown. It is slightly different. It's hard to find this data in Rio's masses of data. In Evraz's, they have slightly different data. Theirs ranges from like 8% to 17%. I'm assuming it's something to do with the currency hedging, and as things happened, I decided just to get a fair comparison to use Hargreaves Lansdown numbers here, but do be mindful if you're looking at Evraz's own numbers, or you can find Rio's, they might be slightly different, but again, it was just important for me to get this comparison. So 2017 to 2020 yields have been calculated by Hargreaves Lansdown and are displayed there. And again, this is Evraz wins that. In terms of 2021, I've calculated this myself based on either already paid dividends or what's been declared. There's nothing that hasn't been declared for either company yet, so that's pretty nice and handy. and then the share price is what it was for the week ending on the 22nd of August, which is when I put together this data. Yeah, so as well as obviously being a higher dividend for Evraz, I actually prefer the way that Evraz do their dividends as well. They're a lot more consistent in how they approach it, whereas you read Rio's dividend graphs, etc. Again, when you can eventually find them, and they make a big song and dance about the specials. But to be honest with you, I prefer regular certainty, not certainty. I prefer the regular predictability that you get with Evraz over these kind of fairly chunky Rio Tinto specials, and also as well because a lot of UK stocks only pay twice a year. When Rio does these like huge specials, it really throws the share price all over the place. Sometimes they'll do sort of high single-digit specials, and that can be a little bit of a mess. So I just prefer it basically, and I think Evraz here is the clear winner in terms of dividends. All right, so moving forward, and hopefully now you've been convinced that these are both iron ore plays. I think it's important to look at the price of iron ore. It's honestly a hotly debated subject, and it was really hard for me to find consistent opinions. There just aren't any. So over the last 5 years, looking back, it's pretty obvious what's happened here on this graph. Iron ore almost trebled in price. It has come down off its highs now, and again, that's being hotly debated about what that really represents. Honestly, predictions for the next 5 years are pretty crazy, anywhere between 75 and 245 per metric ton. Take your pick. Right now it's more or less in the middle of those, slightly closer to the 75, but who really knows. And just to try and get some guidance to see whether predictions are often in line or not, I actually looked back to some 2016 crystal ball reading, and it's just rubbish. I mean, it's laughably poor. Most of the predictions had iron ore around the 65 to 85 region in 2021, so barely half of what it currently is, and I mean barely a third if you were looking at it at its peak. So I just gained no confidence from this at all. I almost wasn't going to put this slide in, but having taken the time to argue that these are both iron ore plays, it then seemed silly to not include a slide about iron ore. But honestly, I can't offer you any wisdom here at all. It just depends what happens with the world. Obviously, if there's another pandemic, that's going to depress demand. If supply suddenly increased, that's going to reduce the price. If demand increases, it's going to increase the price. It's basically economics 101. Beyond that, I have no idea. So both companies are to some degree on the whims of the iron ore price and the wider global economic situation. So that's all there is to it. From my perspective, I'm quite bullish and maybe even a little bit contrarian regarding the global economy and stock markets. So I'm quite heavy at the moment in mining stocks, not just Evraz, but several others as well, just because I sort of have optimism that things are going to improve. So if you feel the same, then maybe it's an interesting business case, which we'll get more to in the conclusion. But let's move on for now. All right, so in terms of whether either is undervalued, actually, it seems like both are. Again, I had to use Simply Wall Street here just to get a good comparison. I found it difficult to find resources which compared both. Some of them just didn't have pricing or etc. I do find with Simply Wall Street in general, they're extremely bullish on commodity plays in general. And their pricing, so take that with a grain of salt. From my perspective, I've actually looked at both of these. I have Evraz down at £7.20, and Rio down at £62. That would make Evraz about 24% undervalued at the moment, and Rio about 16%. So I'm only seeing Evraz kind of 50% better in terms of a buying opportunity instead of what we have here, which is basically 100% plus. But to me, again, the consistent message is that Evraz represents a better buying opportunity in terms of capital return as it stands at the moment. So I guess that's really the takeaway here. Like I said, I do think both of these price guidelines are a bit crazy. But again, they're consistent at least, and they use the same metric to compare both. So I've taken more, I guess, pessimistic approach than Simply Wall Street. But yeah, generally speaking, I do find Simply Wall Street are quite bullish. If you look at some of the oil majors on Simply Wall Street, they're like 80% undervalued. So again, take this with a grain of salt. That's my personal opinion. I'm not an expert. Do your own numbers, etc. But that's my takeaway from in terms of which is better as a buying opportunity for being undervalued. All right, so let's have a look at some financial risk, and I think it's fair to give this to Rio. Honestly, I mean Rio is much bigger as a company, and its market cap is basically 10x. But more importantly, I think that Rio has a much lower debt to equity. Um, it's run more conservatively in general. Evraz, the way it's run, is clearly run a little bit hotter. Uh, and yeah, I guess it's worth pointing out as well that Evraz is actively reducing its debt at the moment, but nothing heavy. They don't seem like they're in any stress to do so. They've brought down their debt ratios, and they're comfortable with it. So that's fine. And I guess from my perspective as well, when I kind of look at Evraz, like they've been running in the same way for sort of a decade. So I think kind of they deserve some credit for that consistency. And again, this is a company that's kind of been delivering double-digit yields across that time period. Again, maybe with a friendly ore price, but they were doing this when ore was kind of at $50 rather than 200. So again, I think they deserve some credit. Also, as well, Evraz at the moment is reviewing the disposal of its coal/coking business. It is responsible for about 15% of their earnings. It would also boost things like ESG scores if that's your thing. They're under no sort of pressure to do so. I also actually don't necessarily really favour it either. I think it's nice to have that, and actually the kind of coking price has been increasing as well. This is all in their deck. So yeah, for me it would be premature to dispose of it. I think it's good to have it there as kind of a smaller part of the business, but not immaterial. If they can get that earnings up to 20%, it starts to really matter. But at the same time, if they did achieve a sale, I'd imagine it would go for something like 3 to 3.5 billion, and that would potentially be an opportunity to pay down debt, or maybe even a special. That would be nice. So who knows? But I'm personally not in any rush for the business to sell that part of themselves, but it is up for debate at the moment. Likewise as well, Evraz owns half a dozen steel mills in the US and Canada, which is bought and is turning around. Last financial year it was at a £20 million loss. Now it's a £50 million profit. Pretty modest in the scheme of things, to be honest with you. I don't really expect this to ever be a huge part of their business. It's one of those more nice to have things, but 50 million is 50 million. And it's also sort of providing a lot of the infrastructure for railways, etc. This is something they call out actually. Something like 40% of US railways are now using steel from Evraz. And it's something like crazy, like 90% in Russia. It's something that they actively target the infrastructure of these countries. Sorry, so just some considerations there. But yeah, like I say, I would definitely give this round to Rio. All right, so other risks now then. So first of all, we've got political risk. I actually had to do part 1 and part 2 for political risk. You'll see why in a second. So first of all, in terms of asset location, so on the left here, you've got Evraz. I've taken this, which is readily available in their H1 pack. Like always with Rio, I had to delve through several pages of their investor relations page. I did eventually get there and had a fairly nice map, to be honest with you. And again, here I would give the edge to Rio. I think the important thing here is where Rio's most important assets are. And if we think back about where their earnings are, it's all in iron ore, and to a lesser degree actually in diamonds. It's difficult to see because of how they group it, but diamonds is quite profitable. Aluminium likewise is it's definitely very profitable, but it hasn't quite got the same margin and earnings impact that iron ore has. And Australia is the place where Rio has a lot of its iron ore play. Apparently it's extremely high grade as well, so it has like 20 mines there, so pretty impressive stuff. With Evraz though, it has a lot of its kind of gems in Russia. I would just objectively say that's less safe. All right, it's just not even close. Yeah, okay, they have some stuff in Europe and Canada and North America, but it's not an important part of their business really. So again, here, if you're concerned about, I guess, political risk, specific locations of important sites, you can see very few actually of Rio's assets are in high risk places, and most of them aren't hugely important. Whereas for Rio, that's kind of not the other way around. So something to consider for sure. I don't think it's trivial as a risk factor, and yeah, it is what it is. Yeah. All right, so to wrap up the review, let's move on to political risk part 2. And here, I mean, I knew Evraz was going to lose this and Rio was going to win. I was actually kind of surprised by just how much what the holding is from the Russian oligarchs here. So 5 of them own 2/3 of the business. It's no joke. 3 of them are more than 50%, and the top 2, that's almost 50% just by themselves. So pretty big deal. To caveat that, number 3 on that list, they're just under 10%. Alexander Furlov. He is the CEO currently of Evraz, so definitely they're still actively involved in it on the good side, I think. But Roman Abramovich, he's probably best known in the UK for owning Chelsea. He actually withdrew his visa extension request in 2018 after it got basically held up whilst the UK and Russia were having a spat with each other. So it's definitely there. I would say that all of these oligarchs currently enjoy more favourable relationships with the Kremlin, and I think that's super important. If any of these fall foul, I think it could have a detriment, and that is something to be mindful of. Again, I guess to caveat that slightly, this has been the situation for many years, and just something to consider. Just to point out as well, the Evraz information is taken directly from their investor relations page. Again, super easy for me to find and get hold of. Most of this does match with Simply Wall Street, with the exception of Maxim Vorobiev at the bottom there. On Simply Wall Street, he's down at like 2.3%, so he wouldn't have actually made this list. But I'm assuming Evraz has more up-to-date information, so I've used theirs. Rio's I actually couldn't find theirs, so I used Simply Wall Street, similar issue. And again, here I've listed anyone with more than a 3% holding. Now, I would say with Rio, I was quite surprised to see the Aluminium Corporation of China. As you can probably imagine, that's basically just a front for the communist state. Now, it does only have an 11% holding, but it is the largest single shareholder in Rio. But, okay, it's definitely a risk for sure, especially because China's been clearly outspoken about trying to influence the price of iron ore, so it is a consideration for sure. So yeah, it was eyebrow raising when I discovered that, but still, I would say here that the risk is clearly a handful of oligarchs and having a good relationship with the Kremlin. I guess also just to caveat it further, these oligarchs presumably like their hundreds of millions of pounds income from a fairly regular payer, so there is an interest in them keeping that up and ultimately paying me and any other shareholder as well. So that is something to consider. Lastly, though, in terms of political risks, I know it's kind of a subsector of that, but I would say that Evraz has a surprisingly high number of fatalities for a relatively small business. It's no laughing matter. So it's something he called out itself. I think it has 6 fatalities in H1, and they're very clear. This is not acceptable. I kind of agree. Rio, by comparison, in their last financial year had 0 fatalities, which is kind of what you want to hear. However, to kind of counteract that, I suppose, Evraz rarely makes it into the news for PR. Maybe that's because it's kept under wraps by the Kremlin, or maybe it's because they have fewer issues. But Rio seems to be in the news every other week. I went back to like 2014. There's literally websites where people keep a list of Rio's naughtiness. It seems to regularly balls up copper mines. I'm not quite sure what's happening there. They've been pressured to fund a study into Papua New Guinea, where they had a copper mine that's now closed because apparently it's poisoning water. Similarly, in Mongolia, an active mine, evidently their copper mine has altered the water table, which they specifically told Mongolia they weren't going to do, and now nomadic tribes don't have any water for their camels. As well as, I think most tragically of all, last year they blew up an Aboriginal site, which is just dreadful. I can't really defend it. Basically, here you're going to have to make up your mind whether either of these companies is what you want to invest in from a risk/governance perspective. I think those things are both problematic. I can't really defend them. It is what it is. Mining does have some of the more grey areas in terms of investing, either from fatalities like Evraz or PR disasters and actually ethical failures from Rio as well. So I'm not going to be judgmental here. I know some people don't invest in certain stocks. It might be that you don't want to invest in mining in general or these companies in particular, but I think it's worth being aware of. All right, so all that aside, in conclusion, actually, I do believe that both Evraz and Rio Tinto are decent bets. Both of them, to me, appear undervalued fairly materially. They both yield solidly. Rio is still currently about 7%. Evraz is more like 12 to 14%, depending on share price. Both of them are yielding well and should make good investments, honestly. I do believe, though, that they're both ultimately iron ore plays, right? I just think 2/3 of both businesses are linked to the stuff, and you should be super mindful about seeing them that way. And that's that. Again, though, I've got no crystal ball. I don't know what iron ore price is going to be looking like. It's something I've read up on quite a lot. I'm quite interested in not just iron ore, but things like copper as well. You know, things that also tend to go through these cycles. Have a fairly big holding in a few others. And yeah, I'm not sure which way I settle in terms of a super cycle, etc. I guess I'm thinking more in a straight direction, and I just believe that the world will continue to progress, need more of this stuff. And you know, a lot of governments at the moment are putting a lot of money in infrastructure spending, where again things like iron ore and steel should come good. COVID's going to matter. Supply and demand is going to matter, basic economic stuff. So if you kind of believe that we're going through a trough in the super cycle, maybe it's not going to be for you. But yeah, it is the price of iron ore really matters here for the performance of both companies, in my opinion. Financially, I think Evraz wins by honestly a large margin. It's been a better performer for many years. Yes, it's much smaller. It has a higher debt to equity ratio and all that stuff, but it's been that way for the better part of a decade. It's just how it runs its business, and it's very outspoken about that in its financial documents as well. So, but bear that in mind. It's more risky though, and again, it's a much smaller operation, right? It's barely 10% of the size of Rio. It has a scarier ownership structure, no doubt. Again, those 5 oligarchs, you might decide that they're just not for you. However, Rio Tinto, like I say, just has a reputation for ballsing up, either blowing stuff up or poisoning water or etc. So it may be that you choose not to invest in either one or both of the companies for that reason. But like I say, both of them I think are good investments, depending on how you feel about iron ore. If you want a better return, probably Evraz. That's where I'm going for. I think I have a fairly safe portfolio, so maybe I'm more accepting of a bit more risk with my mining. If you don't want that risk, though, Rio is definitely the better bet from a risk perspective and political safety. Anyway, do your own research. Thank you very much for being with me. I've been the Boss Hog, and enjoy your evening.